All right. Welcome back to another episode of the Real Estate Investing Club, and happy Friday, everybody. It is a beautiful day here in Seattle. It's like 80 degrees. I love it. I love it. I am super excited to be here. It's a good day for another reason because we have Amanda Larson with us from AMA X Equity. They do multifamily investments, and she has a lot of experience to go into. So I'm sure this will be a good one. Amanda, thank you for hopping on the show.
No, thank you so much, Gabe. I'm excited to be on your show, and I'm in Houston where it's not quite 80 degrees and it's a little bit more muggy, but still a great Friday to be on the show.
Yeah, yeah, you guys are going through some fun weather down there, so
Yeah.
we switched a little bit. You guys got the rain, we got the sun this time.
That's exactly right. So maybe
Awesome.
I'll move.
Well, I told you before we got on here, we always like starting with stories and hearing how people got to where they are.
Mhm.
So why don't you tell us, how did you get started in real estate in the first place?
Yeah, so I mean, like everyone who's in real estate, it's always a journey in my findings. So just like most people, my real estate story is a bit of a journey. So just quickly, so I grew up in a family that owned a lot of single family homes, did the landlord thing, saw that happening. Never thought I would do that because I saw just how it's like having another job. It's a challenge. It's a struggle. And I saw it from a family who was my father was a contractor, so he's very handy around the
Hmm.
house, and I'm not so much and didn't want to have anything to do with it. All that said, I still understood the potential that real estate could have. So I ended up buying my first single family in 2010, and I was living overseas at the time. So while it's a single family, I bought it on foreclosure, and it was a little bit of I call it like a passive investment because my family did everything for me.
There
So
you go.
I'm
That's
very
nice.
fortunate in that regard. And never thought I would really grow a real estate portfolio until I read that little book that everyone reads, and it like turns everyone's lights on and changes their life. So after that book, I just started learning more and getting more involved and seeing what other opportunities real estate had to offer beyond just the well-known single family rental portfolio.
Yeah. Yeah,
And
I feel
yeah,
like
so
everybody gets started in single family because it's what we know. We live in
uh-huh.
houses, we understand how it works.
Yep.
Maybe we know people who have a rental,
Mm-hmm.
and so it's where we get started. But we all, once we really catch that bug, we read, Rich Dad Poor Dad. We
Yep.
want to find out what the next level is. And for you, that was multifamily. At what point
Yes.
did you switch over from buying, individual houses to looking into multifamily?
Yeah, so it was again just I stumbled upon this meetup and one of the syndicators was talking, and I didn't know there was such a thing as syndication, and I heard about it. And again, it's that light bulb turned on and I said, that's it. Like this makes sense. It's like owning and operating a business, which it was really appealing for me. I come from an engineering background, MBA. So the business side of things was much more appealing than trying to run, a small portfolio of houses, which just seemed so disconnected and you more or less doing it on your own. Where syndication, you're working with a team, you lean into your strengths and make relationships with people who can then fill in those gaps. So yeah, again, after learning about that, I didn't look at another single family house.
Yeah. Yeah, people are making plenty of money, doing good jobs in the single family
Yeah,
sector, but I'm
absolutely.
100% with you. I like the business aspect of commercial real estate. I like that
Hmm.
it is a business. I like you go to a bank and they underwrite it like a business. They're looking
Yeah,
at the NOI, they're giving you the loan based on the NOI. And
yeah.
so it's a lot it just computes a lot more in my mind. It's also a lot easier on the acquisition side because I got started in a single family in like 2014, and I just remember, hammering the phones and talking to these homeowners,
Hmm.
and it was just the
Yep.
worst because they have this emotional connection to their house, and
Yeah.
it's just not a pleasant experience. But when you're talking to apartment owners or self-storage facilities, whatever,
Yeah.
a commercial asset class, these are business owners. They understand how to have that conversation.
Yeah,
Um,
I would just was never wired like you, never wired to make those phone calls to all the single family owners and try to buy their
it
house from them.
was not fun, not fun. So take us to that first deal that you did on the multifamily side. You know, you read the book,
Mhm.
you met the
Yeah.
syndication guys, you understood the potential. What was the
Mhm.
first deal you took down?
So I've like many, I started investing passively, but that's probably not, I think it's a powerful way to get started and it's the most reasonable path for busy professionals who
Yeah.
don't want to
Well, and
get
I'm
into it.
sure you
Yeah.
learned a ton from it. I mean,
Yes.
investing in somebody else's syndication. Yeah.
Yeah. So I never, when I was getting started, I didn't really have the intent of becoming a general partner. But the more I learned about it, the more I realized how much I enjoyed it. I could dig in. I loved, like, who knew I would love started studying markets and doing financial models and things like that. And yeah, through my passive investing, I saw how powerful it was. And seeing the GP side and learning about the general partner side, I just leaned into that, joined some mentorship programs and yeah, my first general partnership deal was in San Antonio. We closed it's almost 2 years, so about 18 months ago. 150 units there. And then
Nice.
shortly after that, closed on a deal in Houston. So that one was 260 units, closed on that in February of 22.
Nice.
And that happened to be, I was able to partner with a sponsorship group that hosted that meetup that I ran into and invested with passively. So that's the power of relationships. So I
Yeah.
went from being one of their LP investors to eventually partnering with them and building that relationship with them. So
Nice.
it's
And I just want to call out how quickly, I mean, you're talking about a 2 year time frame, and I think you mentioned it was like 300 and was it 350 total units? How quickly that can happen. You know, most people
Mhm.
think I gotta work 10 years to get 100 units. Like
Mhm.
that's not the case. You can find one building with 100 units
Yeah.
and get it done with a team.
Yeah. Yeah.
So there's a lot of ways we can take this. I always like hearing about the team building side of it because that's the piece that I didn't really understand.
Mhm.
When I first got into the commercial side, is how much more effective you can be when when you have good partners and you have a good team around you.
Yeah.
I always thought like you got to do it all yourself, and that's just
Mhm.
not the best way to go about it. So,
Yeah.
um, that first deal, that San Antonio deal, what were the different roles that people took on, and then
Mhm.
what was the lane that you found fit best for you?
Yeah, so the San Antonio deal, I met the general partner of the team through a mentorship program that I was involved in.
And
And
do you wanna give a shout out to that program real quick?
it's a Brad Sumrock program. It's
Okay.
based out of Dallas. Good networking, good education. And that's where you meet a lot of people. Like you said, you have to find a way in this space to connect with people to build a team. So
Yeah.
however you do that, mentorship programs, meetups, something, but not many people can take down a 100 unit building on their own
Mm.
just because there's so much involved,
It just yeah,
especially,
takes too much
yeah,
time.
it takes
And you
too
don't
much
want to
time.
because you'll pull your hair out.
Yeah. Particularly right now and moving forward, things are so,
Oops, it looks like we got a little bit of a freeze on her side. So we're gonna wait here for a second and see if her internet reconnects. If it doesn't, maybe we will reschedule this one. We're gonna hold for 1 second. All right, we're back. Tech issues happen all the time, but we roll with it because it's real estate. So, Amanda, what were you just talking about? You're talking about the San Antonio syndication, the team that you were building. What were the different roles, and then what role did you take on? All right,
how important it is to have a team, particularly when it comes to capital raising, because it does take a lot of capital on these deals and not many people can raise 10, $20 million. And so that's where everyone needs to lean into it. And I don't think maybe that was the case five years ago even. I saw more of a siloed effect, but right now that I'm seeing that become one of the most valuable skills. a real estate investor can have is the ability to raise capital.
Yeah.
So, mhm.
Great. So, are you're doing the capital raising for the partnership?
I was
Or it
helping
sounds
with
like
that.
everybody is. Yeah.
Everyone did, and I was helping with that. The Houston deal was a little bit different. That's a deal that I found, and I got under contract, and then I had a team already built up, and then brought other people on
Nice.
close that as
Um,
well.
so how'd you find that? What's your guys' main source, or what's your main source of leads?
It's relationships with brokers. That's where most deals come from. I think in the single family space, there's a lot of off market opportunities, but in multifamily, what I find is you're dealing with sophisticated owners who want the best price for their deal. And they get that by taking it to market. So there's some off market deals, but in my experience, not many. So, but you need to get to know the brokers.
Yeah.
Relationships with brokers goes a long way.
Well, and yeah, I mean, in my experience, a lot of the good off-market deals are actually through brokers. It's just a
Yeah.
broker who has had a conversation with a seller, and before they bring it to the market, they say, "Hey, I know this buyer. I know they can close. I know they can get you a good price. Let's close with
Hmm.
them. I'm gonna, introduce you to them."
Yeah.
And get the deal done before they even list it, and that's why making those connections with brokers is so important. Something I only learned recently. I was doing 100% off market, sending mailers, doing calls,
Oh,
but then I started I started reaching out to brokers, and I realized like I'm an idiot. I should have been doing this the whole time.
okay.
uh,
I would say it's probably, don't want to use the word easier, but there's only a handful of brokers in each market when it comes to multifamily. So it's really just making good, strong relationships with 10 people,
yeah.
I would say. So,
So let's talk. We talked about capital raising. Let's talk about underwriting.
okay.
It sounds like something it's you really enjoy doing. You've got your
Hmm.
your MBA, so you have the analytical side of the business down.
Hmm.
What are you looking for in terms of when you're doing your underwriting, like in terms of the area, in terms of the IRR for your investors? Give us just kind of an overlay of how you run your underwriting process.
Yeah, so the first thing we look at is median household income of the area, looking at, we want a strong market that where they can afford the rents that we're asking for and that can sustain and absorb the growth that we need to give a return to our investors.
And do you
So,
guys have any metric in terms of like the average income has to be
mhm,
X, you know, X amount of the
yeah.
median household or house price?
So we look at, generally speaking, a median household income of 50,000 or more within
Mhm.
1 mile. And usually that's the baseline. And then we look at the rents. If we're looking at a specific property, the rents usually need to be no more than 1/3. So they're spending no more than 1/3 of their income on rent. Otherwise, they just won't be able to absorb it.
Yeah, that
Um,
makes sense. How about the area? It sounds like you are only investing in major metros. You're not looking, San Antonio, Houston. Those are major metros. They're big cities.
mhm.
Do you guys look in tertiary markets, or are you only looking in the big guys?
It can be tertiary, but it needs generally close to a major market. So
Okay.
not middle of nowhere, but it can be a tertiary market off Dallas, for example. We look at those markets and outside of Houston. Um, but it needs to be close to a major market just because that's where we see the most population growth.
Yeah, that
Yep.
makes sense.
Mhm.
Got it. So let's talk about the next couple of years. What does it look like for you guys? You just took down these two deals in 2 years, pretty big deals.
Mhm.
So what are your goals for, let's say, 20 from now until 2026?
Yeah, so definitely still we're buyers, so still underwriting, still touring, submitting LOIs. There's a little bit of a disconnect there's between buyers and sellers right now. So I think that gap is closing, but we do see the next few years as one of the biggest opportunities in real estate. And, commercial properties are on average 30% below where they were a few years ago. And so this is a great opportunity if we can find a seller who, you know, where we're on the same page. And yeah, it's a great opportunity. And so we're definitely being active, growing our investor list and really leaning into it. So yeah, as much as we can do, I would say.
Just keep buying. I love it.
Yeah, lean into it.
All right, I'm going to take that opportunity to move us on to the quick question round. Are you ready?
I'm ready.
All right. It starts with education. Could be any form. Could be movies. Could be books. Could be
Mhm.
podcasts, YouTube channels, whatever. Give me two recommendations: one for general life wisdom, and then one for real estate.
Okay. I'm a big book person when it comes to learning. So I would say for real estate, everyone needs to be able to raise capital. So I'm going to recommend the book, Raising Capital for Commercial Real Estate, Hunter Thompson's book. It's kind of the game plan for what you need to do. And General Life, Maximum Achievement by Brian Tracy. I won't call it a classic, but it's not one of those fresh off the shelf type books. Uh, I found it like just to open my eyes to a lot of different mindset, changing my mindset, open my eyes to that. And I've gifted it to a lot of people. I found it to be similar to the purple book that everyone talks about, just a game changer in my life. So,
Nice. I used to love I would listen to Brian Tracy on CDs
oh,
like
really?
a long time ago.
Okay.
But I like his message. I think he's
Yeah.
yeah, he's really good. I don't know if I've read that particular book, but Brian Tracy is a good name.
Okay. Yeah. Not many people have heard of him, but I feel like a lot of what we read now is just what he said a while ago, just regurgitated. So
Yeah, wisdom doesn't change. All
yeah.
right, next question is for your younger self. Let's go back to the Amanda who was still in business school way back when.
Mhm.
Go to her, look her in the eye, give her one piece of advice moving forward.
I would say don't don't spend so much attention trying to get that next promotion.
There you go. That's a hard one to take to take in when you're younger.
Yeah,
Can be
I
really really
spent far too much time and effort just doing everything that I could do to climb those ranks in the corporate world and gave up a
now you're
lot.
here.
Yeah, now I'm here. So
All right. Well, next question is about the U.S. It is a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
I really like Dallas Fort Worth. I see a lot going
DFW.
on. They continue to be strong throughout like every peak trough, population growth, job growth. It's it's yeah, I love that market.
Yeah, absolutely. DFW is one of my favorites too. All right. Next question. We've already gone over this, but I'm gonna dig a little bit deeper. The question is, it all starts with penning the agreement with the seller. So, what is your favorite way to generate leads and find new deals? You've already mentioned that is connecting with
Mhm.
brokers. So, I'm
Yeah.
going to ask, what is your favorite way to connect with brokers?
Yeah, well, it always starts with the phone call, just getting to know them and then getting out there and doing property tours. I do property tours even if I know I'm not gonna like the property because it's a great opportunity to get out there, get some FaceTime, talk to them, get to know them, ask them about their family, ask them what they do in their free time. It's an opportunity just to build that relationship, everything you can do. And then that builds into having lunches and doing things outside of just real estate. So,
Yeah,
but it
makes
starts with a
sense.
phone call.
It all starts with a phone call.
Hmm.
And so it sounds like you only invest locally. You don't invest, or do you fly to fly to different states? Well, you've only mentioned Texas so far, and you live in Texas, so I'm assuming you only
Yeah.
invest locally.
Right now it's just local, simply because I focus on acquisitions. If I'm investing or raising capital for another market, I would invest outside of Texas. But right now, Texas.
Cool. All right, next question is about the money. It takes
Mhm.
money to take deals down, and raising
Yes.
capital, as you mentioned, is one of the most important skills in your tool belt. So, what
Hmm.
is your favorite way and your best piece of advice to raise capital?
I would say get systems in place and start building that investor database. It's I think a lot of people shy away from it, and myself included, thinking that, there's this myth in real estate, if you find a good deal, money will come to you. And for a long time, I believed it, and I thought I wasn't going to have to lean into it. But the simple, yeah, that's simply not the case. And so just start learning how to educate people, because it's a process. It's not everyone's going to be interested. So just start talking about what you're doing, start getting to know people, and share how it's changed your life, and people will eventually become interested.
There you go. All right, that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. It's a two-parter. Where can they find you? And then what can they expect when they reach out?
Yeah, so find me, you can find me on my website. It's almaxequity.com. And then I'm most active on LinkedIn. So just my name, Amanda Larson. You can find me there. I post every day about, my journey, my story, some tips and tricks, things like that. And then schedule a call. And it's really just about meeting you wherever you are. If you're an experienced investor, we can talk about what you're looking for. If you're new, I can answer questions. It's just letting you guide the conversation and not me. And then I can share and answer questions where that needs to be.
Perfect. I will put that link in the show notes. So if y'all want to reach out to Amanda, just click the little more in the description. It'll pull down
Mhm.
that full description, and in there you can find her link.
Excellent.
All right, Amanda, that wraps it up. Thank you very much for hopping on the show.
Okay, thank you so much, Grabe. It was a lot of fun and a pleasure being on your show.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at the realestateinvestingclub.com. If you want to support the show, just give us a review on Apple or Spotify or whatever you're listening to this on. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.